Hi, Dave Brown with First Class Lending. Today I want to talk about what we're calling a loan for the times. And it's a reverse mortgage, second mortgage. So a little different than a normal reverse mortgage. Let me walk you through an example that might help this make a little bit more sense. Let's suppose we have a client that has currently a $1,300 a month principal and interest payment with a nice low interest rate of 3%. And they don't certainly want to get rid of that and replace it with today's rates, which are obviously a lot higher. But they need funds for a variety of reasons. We'll talk about that in just a sec. Let's say the value of their home is $2 million. So we put that information, their age, the value of their home, how much they currently owe, into the software program, and it kicks out and tells us that they're eligible for up to $800,000 in reverse mortgage loans. So what we do now is we subtract out the $300,000 that they currently owe, which is their current loan balance, to generate that $1,300 payment. And that gives them available second mortgage of up to $500,000 that requires no principal and interest payment ever, as long as they remain in the home. Let's talk about some uses of what they can do with that money. And I have an acronym I've come up with called GRASS. The G is a gift. They could gift a grandchild, a child to help them with a home purchase. That could create more transactions for our realtor partners. Maybe they decide they want to help a child or a grandchild with education. All sorts of things they could do. Maybe they take that $500,000 and buy a rental property to create some income, because technically that equity that's sitting in their property isn't creating any income for them. That would create income, buying a rental property. Maybe they want an ADU, add an ADU onto their home. That could also create income. They could buy a second home and add asset value to their estate, which can pass along to their heirs when they pass. And then the last thing is just have some supplemental reserves, and they could pay off debt. They could travel. Maybe they need insurance, or the cost of insurance is going up quite a bit, so it could help supplement that. So there's all sorts of uses of what they could do it for without disturbing that great 3% first mortgage. If you have any questions about this, please feel free to reach out, and we'd be happy to talk to you or anybody that you know that may benefit from this great program.